services from home interface. Systems are now fully operational.
Nice level. Checking in. Survey. Outlook. Yeah. So we are here again. Another gathering. I wanted to give the others a chance to get in. Yeah. So I'll get it on in a minute or two. Right. I moved the whiteboard right here to the right instead I have it right in front of me right there. Can I move it to the right? So I'm gonna be using this whiteboard a little more often for demonstration purposes. Right? So we are gonna look at some yens, dollars, Swiss franc, pound, CAD as we go along. Right? And we are also going to do a relative strength exercise. And my purpose for using the relative strength exercise is for choosing the best asset with the most potential to trade, right? So this is a market scan that I basically have out. So this don't have any special layout. Just have WTI gold, dollar CAD, euro dollar, Aussie yen, and pound yen we have right there. So I normally have let's my template, like we are gonna do dollar first scan. We are gonna scan the dollar, right? And so with that being said, I'm just gonna clear this up, take out the pivot points and just have it clean, so you guys can basically get the idea, right? And I have it on the 4-hour chart. So when I use the term relative strength exercise, I'm referring to with a weak asset versus a strong asset, right? We have it. So we have USD as the driver, right? Is either USD weak or we have USD strong, right? So let's say we expect weak dollar, right? Weak dollar, right? So we are looking for a strong currency, right? To put the US dollar with, right? So this also, in this case, like we are looking for a weak dollar, in this case we would say this is risk on, right? Risk on, right? So the dollar is on the right hand side, so that means when the dollar is strong, it is going down. And when the dollar is weak, it's pointing up because the dollar is on the left hand side, right? It was other way around, like the dollar yen. When the dollar is weak, it is going down, right? It was the other way around where the base currency is, right? So since we have that out the way now, right? Since we have that out the way now, then we just go through and analyze the chart, right? So would I just change the size of this, change the color. So we would have up, down, up, down. We are thinking this, down, up, down, up, right? So we have down, up, down, up, down. We are thinking up, we have up, right? I'm just laying it out on a basic. These smaller one, you might say it different because the screen is a bit smaller, right? Euro, dollar. Cool. So change the color now. On a bigger time frame, we judge the size of the move and the swiftness, the sharpness of the move to determine the weakness, the strength of our asset, right? Because we are put it against the dollar, right? So a weak dollar equal the other currency being strong, right? So we have this, I would say, pound dollar. Change the color. Use the red. Pound dollar is doing well because you see the price action and the swift movement. Kiwi dollar doing well. USD yen fairly well. I'll put a 0 right there. The Aussie dollar is doing extremely well. Euro dollar partially. USD CHF partially. Right? Dollar yen USD CAD still partially. Although we are seem to get in some form of move right there. So with this being said, right? With this being said, I analyze my chart like this. And I will plan it in days before or sessions before I enter the market. So let's say I'm risking 1% of my account, right? I would want to take the best trade. So I would split this in two. So I would have 0.5% per asset, right? Per asset. So I will choose the best, right? So I can basically I tick 1, 2, 3, right? These 3 assets based on the flow and the price action, right? We could determine which 2 out of these 3 I would trade for the next swing up, right? Because you don't really want to trade. Let's say we have USD weak um, and JPY weak. Both currency weak. You're not really gonna get much movement unless one is a driver at the time. You might get a little bit more move, but you won't get that greater. You don't get that much movement, right? But if you use a stronger asset to a weaker asset, you get a sharper move like this. You get more pips, right? You get more pips. Aussie Yen did extremely well. Kiwi Yen did, Kiwi dollar, Aussie dollar did extremely well. The Kiwi dollar did well also, right? And the pound dollar did well, but we had a little struggle in the, yeah, but it still went well, yeah. But we can see where all the asset play out. So let's just, so we have the pound dollar, Kiwi dollar, and the Aussie dollar, right? So we only buy at support in an uptrend. So about the pound dollar, because I was looking at this as a role reversal area, and it's just naked chart. I don't have any, no pivot. Also, this is no pivot, right? This was weak, right? This was weak at current price. So as you can see, it broke the resistance heading to. I would feel more comfortable buying it right here, right? Similar price action right there. Just a minute, let us zoom out that so you guys might have a right. So I will feel more comfortably buying this asset right there, right? So this was the reason why I chose this asset, the pound dollar, to buy, right? Because I had the support right there. This didn't quite get there. This breakthrough right here went down. I'll feel more comfortable buying it down here, right? Because if you look on this, if you draw this straight cross, it broke through support now turn resistance, and we will just expect a basic price action, a rollover like this, right? So this is how I do my relative strength exercise to determine which asset I will choose. And also I use macroeconomics also, right, to help me choose the asset. So yeah, that is that. So that take care of relative strength exercise. So I'm gonna talk about pound dollar that I took from this week. My trade plan is risk on, and I was paying more attention to the yen and the dollar, right, more than the Swiss. So scan market. Alright, first yen. Right. So this is how I really have my chart layout before I drill down to execution. I have a different template that I use for execution. This is a bit messy. I can just clean this up real quick for you. Alright. This is just price. I have different template, different strokes for different folks. Right. Euro yen, Aussie yen, Aussie yen, Kiwi yen, USD, yen, Swiss yen, and we have pound yen. So basically, I buy the pound, I choose the pound asset over the good night, general, respect. Yeah, I choose the pound yen out of the rest of, out of the other asset, right? And I also trade the Aussie yen too, but on a different account. I kind of spread my risk across the board. I don't really risk a lot on any asset. Like many traders, for example, they are looking to trade the say Aussie yen, the yen. They're trading 1, 2, 3, 4, 5, maybe the whole 7. They risk each trade. So let's say each trade they risk like 2% per trade. So they take 2% here, 2% here, 2% here, 2% here. So in total, they are risking 8% of the account, which is total setup to failure, right? Total setup to failure. So you must be able to use, say, yeah, look, I have the shirt right here. 9 lives. 9 lives. You're supposed to be able to lose 9 trades in a row and still have your account up and running with confidence. 9 life. See? 9 life. Okay. So let's drill down to the lower time frame. Right? To the execution template. So I'm going to the pound yen. Come on. Pound yen. And I already planned risk on this week or risk off. So over the weekend or the week before, I had it. So this is where the execution take place, right? I'm gonna right here. I have my auto stop and auto take profit. So each time I take a trade, the stop plays automatically and the take profit plays automatically, right? And I also have this little box right there. This is the Tokyo session, right? When the Tokyo session starts and when it will show me when the Tokyo session ends, right? And I also have an Asian box also, right? So I have different box, different templates for different sessions. So I'd like to know what the Asian guys going to do so I can determine the next move, right? Yeah. So I have this right here, which is just an indicator will show the spreads, the high and the low of the candle. The candle, it shows the high and the low of the candle. So if it's a 4, like over here, we have the 4-hour candle, the 4-hour candles. This is the 4-hour 8-4 chart right there. This is the 5-minute, 15-minute, right? And this is the H1, and this is the daily, right? This is the daily. So this is how So my main purpose of having these layout like this, I would like to know what the forward guys are doing, the daily people, the traders who trade the daily time frames are doing, and the hourly time frame are doing, and also the scalpers and the 5 minutes charts. I'm here with them also, right? So I want to get a bright, says multi-time frame analysis. I don't just, you can't just stuck on your 5 minute chart or your 15 minute chart and don't see the bigger picture um, constantly, right? Or you have to keep flicking through screen. So when I have it like this, it's more efficient instead of to constantly squeezing through the different time frames time after time. You see everything right here at your fingertips, right? So this is how I have my basic layout. So here I have the daily pivot, right? Daily pivot, and I have the weekly right here. Excuse the writing. Weekly pivot, and this is also the weekly, right? But this is for an hourly time frame right here, right? Weekly. So oftentimes on this time frame, I would have a weekly and a monthly template. A weekly and a monthly template on this time frame, right? Weekly and monthly pivot. And it's just weekly alone. So we have a confluence of weekly and monthly pivot on this time. And it's just plain, no pivot at all. Just plain price action right there. So I see what's the daily. So how big it is, so big the candle is, right? So I want to see the high of the day and the low of the day, right? When you understand market psychology, you need to pay attention to the high of the day, previous day rather, and the low of the previous day or the next day after, right? So with that being said, you need to know which session is going to do what. Basically, we also assume, right? Which session going to do what, right? So for example, Asian session take it down, London session take it up, and New York session maybe take it back down, right? And all of this is just like one trading day, right? So when you have these things aligned, you can know what is the next move, right? So this is how analyze it, right? So I had about, I'm going to show you a little trouble that I running. Not necessarily trouble. Not necessarily trouble, but I'm going to show you how challenge it was challenging, right? I bought here. I bought now let's do it on the flow forward time frame. I bought right here, right? And this was yesterday, right? So when I bought and I hold, cause I'm basically mostly a swing trader slash day trader, but I enjoy swinging, right? So I normally scalp my way in swing trading, right? So I'll get a tighter entry, right? So I took a screenshot of it. I'm gonna share it with you. All right, basically, this went all the way down, right? And it was at resistance. It was at support, sorry, and it was at my monthly my weekly pivot, which is M2. So I use price action and execute the trade. Put my stop to break even. Was up 60, 70, 80 pips. One time was up 100 pips. Right? And I put my stop to break even. And to my surprise, it went all the way and stopped me out at break even. Right? But I understand the market and I understand market psychology and things like that. So I bought it back right here. This evening. I bought it this evening. Right? Almost the same identical price. Right? Today, come on. This evening I bought this. Right here. Right? Knowing that the market maker want to go for a stop hunt. The person who bought this yesterday, because this was yesterday's low, right? This was yesterday's low. The traders who bought this move their stop to break even. The market maker just come back for the liquidity and just take it back up. Right? So I stick to my bias. Right? I stick to my bias and I bought it and now I'm back up again. Right? Let's see if we are going to get another stop out again sometime today. Because right now we're in the Asian session right now. Then we have the London session after. So we have it right here on the daily. We have the rejection right there. And we have the rejection right there. So this clearly telling me that sellers in the market, buyers in the market right here. Buyers want to gain control and send the price up. Right? So I'm looking for a breakout of this move all the way up. Right? All the way up to about see, I have it right here, 136, 130, just say 137, 137, right? Right at this pink area right here. So that is my trade plan, right? So, and also bear in mind, this is the monthly price for April, right? This is the monthly price, 132.50, and the target price is 144, right? This is on a monthly pivot basis, right? So chances are, I don't know what the market might give us, but it might go all the way up until I see bearish price action along with some fundamentals. Then I will consider selling this market, which that would also lead to risk off, right? But now it's currently risk on, definitely. So this is just an account that in the challenge group that we have, and I'm gonna grow a small account with consistency, right? And swinging 20 pips, scalping 20 and 30 pips won't get you where you are supposed to go, or where you're heading to as a trader, as a currency trader, right? So this is just an example that I would like to demonstrate and show all the members in the group, right? That this is the way we should take it, instead of going in the market taking 10 and 20 pips out of a 100 pip move or a 300 pip move. Yeah? So that is the pound yen. I'm gonna take a look at the pound dollar now. I'm gonna take a look at the pound dollar now. And as you see, we look at it on a earlier time frame, right? So boom, in a nutshell, at the breakout, let's use something else. Let's use, and in a nutshell, at the breakout, let's change the size. Come on. We had a breakout, we had a pullback, right? So I bought into the pullback right here because I need to see that buyers are in the market before I take it up, right? So this is my trade plan for this asset, right? And I was just playing basically support and resistance. I wasn't just using the pivot points, right? And if you check the pivot points, it is not quite in the this is a sell zone in the pivot point, right? This is a sell zone, but I wasn't playing that. I wasn't playing that, right? And remember, price is above, right? Price is above also, so we have the multi confluence right there, right? So with that being said, I'm expecting a continuation of risk on for the rest of the remainder of the week, or within the next week or 2 more weeks. Let's see how far price take us. We have the daily right here that mentioned earlier on. So chances are we might come back and test these 130 area, right? But first, we'd have to definitely get past 127, 1.27 before we can say, we can think about this next, area of interest, right? So when you're persistent in your trading and when you're committed to the craft, you will definitely be on top of your game, right? You will definitely get on top of your game. I personally wouldn't be a bear on this asset unless it breaks the low, and I say bearish price action along with bearish fundamentals, right? So that is my take on that asset. And we also have gold, right? Come on. We have gold. Probably we need to clean it up, right? So you guys, many times I get complained I have too many lines on the chart. Too many lines, right? And I don't really need them, right? I can use either take out the candlestick and give me a line chart. I'll be fine because the price action remain the same. Just an extra tool that I use. I need my pivot points. So we can use what we have right there. We can use the standard deviation right here, right? And as you can see, we are at support right here. We are bouncing on support right there. And we have a bit of support right here, somewhere in here, right? So bears want it to come down and bulls want it to come down, right? So this is technically still bullish, right? You need a price action like this, up, right? And this now turn resistance before you can thinking about selling to minimum right here, right? And this would also lead, this would be the, right, back to the end of this deviation right here, right? So bulls we're definitely looking to buy this to take the next leg up, right? So this is how I would play gold. I'll be cautious, right? I will definitely be cautious as we go along. So we might get this move to this to 163, right? And then we get the continuation of the bull run, right? Also, this area might be of interest right here if I drag it straight cross, but yeah, 1570 area, right? But we'd have to get past this area first, right? So when you analyze the chart, you just wait for price action to give you the confirmation along with some fundamentals, and it might make your trading life way easier and less stressful than what it is, right? The problem is many amateur traders say, hey, this is a resistance, this is a top right here, sell right here, put your stop, put your ST right here, right above the eye, boom, market meter, stop them out, right? Then don't give the price, then don't give the chart a chance to really set up itself for the move, right? For me personally, the way my trading style, I don't want to be the first idiot in, right? Let somebody else test the water and I'll jump in after. I don't want to be the first idiot in. So I will allow the price to, like this breakdown and give me a pullback, and then I would like this to be my resistance as I said, and I would take it down here. So I would sell it right here, not up here, right? So I'm gonna leave it right there for now because I'm a bit tired. I haven't get any sleep, right? I'm up like 10-12 hours a day, right? Cause I'm up doing the Asian session, catch a small nap, straight through London session to New York session, right? Because I want to try and be present when the move is taking place, right? Timing is very important. Timing is very important. You don't want to be reactionary. After the candle, you don't want to be chasing price, right? You don't want to see a big, let's change the color. You don't want to see a big candle, bull candle, then you buy, right? You want to buy and allow price to take you up, right? So the problem is this, similar like up here, many traders, amateur traders rather, they are reactionary. They see this big green candle, they buy, and then the market, boom, 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 excuse the drawing, but these supposed to be red candle, red candle, boom, take them out, right? Take them out, and then boom, candle went all the way back up, right? Stop them out, then head in their direction, right? Then don't give the market time after time to set up and prove itself. Similar like we have right here, give the market time, patience to pull back, break the break, pull back, and set up for the move, right? Just like in the pound yen, right? Pound yen, it's the breakout. Let a look at it before I leave. Let us look at it before I leave. Let's look at it before I leave, right? Because the price action was screaming out sell, sell, sell. What is this? Gold or wrong asset? Wrong. Just a minute. Oh. Okay, alright. Where is it? Pound yen, right here. Let's clean it up. Naked. I'm just gonna no pivot, just raw bond price action. Right? Straight price action. Right? Straight price action. Now, change the color. Let's use green. Right? Resistance right there, hit roof. Right? I'm gonna draw this straight across the board. Right? Cool. Resistance. So this breakdown about because I had some support right there. Right? So guess what? Let us change the color now. Right? This is what similar example that I'm giving you with the gold, right? So you need it to break down, pull back, right? Sell. You got to sell here, not when the candle is way down here, then you sell, right? You need to sell up in here, pop a stop above here, or you could say all the way up, but for risk management, because you're expecting some support right down here, so you wouldn't pop it too far, right? So you'd enter right in here, right? And you sell. So I understand this is sellers grounds, but I was in the buy. I could take profit, right? But my aim was all the way up, right? I wasn't looking for, say, this went all the way up to 100 pips. I wasn't looking for 100 pips. I was looking for like 1,000 pips, 500, 600 pips. That's what I'm looking for. So I'm here right now, right here. I'm looking for a couple hundred pips, right? So this is my way of thinking. So the bear are getting challenged again. Let's see how the week ends, but I'm looking at breakout, pullback, breakout, pullback on the way, right? So this is what I'm expecting, right? Yeah. So back to what I was saying, allow the price action to develop, exercise some patience, and allow the price action to develop before you thinking about selling. I don't want to be the first idiot in. I'll be the second idiot in, right? That is just my line. So, right. So I'm going to leave it right there, and thanks for the attendance. I don't get much turnout today. I don't know what's really happening on the regardless, we have the virus here in Jamaica, and it's giving us a warm time, right? So we are now 152 cases, right? So one section, up St. Catherine, the Prime Minister have it under lockdown, trying to contain the spread of the virus. Yeah, night, David. Yeah, I'm just out for close the live, because, the time and thing like that. But you can watch the recording. Remember, please like, share. I would appreciate a comment, right? And when you subscribe, right? When you subscribe, I would like you to just click that bell icon that you see, so you will get notification when I am live streaming. So maybe that is the case why we have we don't have many turnouts tonight, right? Just click that bell icon so when I'm live, you guys can get the notification to come on board, right? So remember, keep safe, please everyone, keep safe, and have a wonderful weekend.